MMT traders, as we have stated in earlier analysis that we were short Intuitive Surgical and buying puts when it was up there. It's down $27 on some comments from a research analyst firm. This is a $510 call that was $42 before this happened. Now the calls are down to $30. The low is 1201. You can take a look here how wide that bid and ask is. It's 1170 on the bid, which is us, and the ask is 1480. That's $3.10 wide. As a master market maker, I know how to get in within these spreads on the short-term level. And basically, we are putting our bid above here because if I'm getting hit over here, I'm getting hit below that low. But if I'm getting hit over here, I'm saving $3 in my entry. We have various techniques that we use to get these entries when they're, think of the Grand Canyon, how wide the Grand Canyon is, and think of your public experience in trading options. You don't know what to do with this, so let's not hear and kid each other. We do. And the thing about it is, how do I trade a wide bid and ask range in the option pit on a $510 call that has just been mutilated from $42? The high was $29.70 down here. And we are on the bid, so if I'm buying 5 contracts here and I get hit over here, I just save $1,500 in my entry. Now, having said that, you can take a look here in the MMT platform on ISRG. When we take a look right here, we can see that we're at the lows and we're on 1 IR and we're down over 3 deltas. Each one of these lines are 56 cents. They're not deceptive. They don't lie. The math is true. We came down on that first bounce. We popped up and we've made these lower lows, and now we're down here at the lower end of that news event that happened on ISRG. And basically, when this is very weak and we're at 3 deltas, we could go down another half a delta to 3.5 deltas. And that price mathematically would be exactly 515.16. Now, I've showed the chart and how weak it is. I've showed the wide bid and ask, and we're at 1170. There's 36 contracts traded. The people that own the calls are mutilated. And we like to buy them at the very cheapest price. So when I'm buying down here, I always still have risk. But do I have the risk that people had at $29, $42, $35? I don't think so. And once again, dollar capital risk is one of the most important elements of being wholesale as a market maker. The name can trade down. So if no one hits me here and I'm $3 wide and I got 1150 as line below the market, there will be a time where I cancel that bid and put the lower bid below it. As soon as these people disappear here and this side of the market doesn't throw over to me and save me $3 on my entry, $3.10 I'm saving on the entry, and on the low of the day. I'm the master. That means that the master has the least amount of risk. Still has risk, but you know what? Think about the people that own them at $25 a contract, or $35, or $42 on the close, and they're down $30 a contract. I think that my risk has been adjusted, and if he doesn't throw over, and if I start to tick lower because the name is very weak, I will drop this bid down to 980. But I'm going to sit here and see how this name responds. It's got 203 lows and 1 high on the day, and the range is 2867. So it's pulling what Apple did and a lot of other stocks did. It had to. Fundamentally, ISRG was overbought up here yesterday when we were getting at 550, 555s. It was overbought and it had to come down. And people don't know when to get out of the way. There are some fundamental reasons behind it, but right now I'm going to buy cheaper. And this is a perfect example of what the option pit can do to the public and why they stay on the sideline. Now, no one is throwing over to me yet. And if I tick down a little bit lower, I'm going to cancel that 1170 and I'm going to see if the 1150 stay or disappear. So cancel the order, MMT. Okay, now 1150s are lined. Now what we're going to do, because it's still a wide bid and ask, and this thing could drop another $2, we're going to throw bids out below the market here at $8.70 now. That's what we're going to do. And we're going to keep that order out there for the rest of the day. It's 1150 now. All these bids are lined on PHS, CBOE, ISE, ASE, and NAS and BATS. They're lined here to sell it. They're lined here to buy it. What we will keep doing is throwing the 1170 bid out there. We'll let it stay out there for about a minute. If no one throws it, then we'll cancel it. We'll keep the lower bid, because what we're trying to do is get these people to act to us, throw us the order based on their emotion. But because of the low volume here, there's not a lot of players in this contract. Okay, now 1170s came up there with him, and we're just going to leave that bid and ask here, and I'm featuring that chart, and I'm featuring the trade that the big money made, and Ken Flagg will tell you, was the 550 put. When the 550 put was at $9.53, they're $24, they're $15 up. As the stock was falling intraday, in the morning, these put contracts remember, it was in the money. It was about $2.50 in the money, 550 put. And they went up $24.71 to the high. And they're at $21.70. They're at $13. The low was $9.53. They closed them at $8.60. They gapped them up less than $1, and then they've had a $15 upside movement. And Flagg was buying these 550 puts, and we've been on this name, and the big drop has happened today. Now that this is working, we're going to deal with buying this call. And you can see that the call spread between the two have narrowed. Now it's 1210 by 1480. And somebody put it in at 1260, well above there. So we're going to see what these people do. And we're going to keep the lower bids on the market, but we're going to try to get at least $3 below this intraday low for the bigger purchase. But we can make markets in here. The training is, how do you as a public person get in between the bid and ask on like that? And not only does it happen on this one, it happens on Google calls, and it happens on Apple, it happens in a lot of them. Priceline, CMG, Netflix, you name it. They can get very scandalous, and they can get very wide in the bid and ask, and you have to know the technique to how to steal that bid away from them. And the only way that these people aren't doing nothing, they're just keeping 1480 here. This is a program script in the option pit, mathematically, just like the high frequency in the equity itself, in the name, selling the bids down, the high frequency robots, well, the robots in here too. And this is how we trade and buy wholesale on big drops in names that are on headlines on an intraday level. Things will change in the next 10 minutes maybe, or the next day, or whatever the case is. But once again, it's how do I participate on the call side when this thing is going to get oversold. It can still drop down to 515. There is not a lot of volume. It's 1.1 million shares, which I would say is above your normal volume because it's very light volume, this name. And it's headline related. And how to steal the calls and how to trade headlines. ISRG is mutilated and needed to be shorted. We kept staying on this name day in and day out.